Hey guys, it's Victoria here. And today I want to talk about some of the setups that I look for, right? Now there's three main setups that I like, but today I'm going to talk about one. I'm going to try to keep this video short and to the point so that you can go back to your charts, pairs that you like, and chart them out, okay? Today I'm going to review NZD-JPY, and I'm also going to review the pound dollar GBP USD. All right, guys. So before we get started, real quick disclaimer. I'm not a financial advisor. I'm not certified. I share this information for you for educational purposes only. Remember, trading is risky. You only want to trade with discretionary funds. This is a zero-sum game, guys, so be careful. Make sure that you are managing your risk properly. All right. So as I said before, I want to talk about setups today, what to look for in the market. Okay. Today I'm going to talk primarily about the three hits to the high or to the low and how to mark your charts properly, right? What are the zones, right? Your psychological support and resistance zones that you need to be paying attention to. Okay. Before, when I first learned how to trade, I had no idea how to properly draw these support and resistance zones. It completely drove me crazy until I found the strategy with the market maker cycle, right? So the market maker cycle, the main things that you're going to need for this is, and you guys have this available to you for free, okay, in the Dropbox. You can download these MT4 indicators. One of them is going to be the Isley line, which is the psychological support and resistance. For those of you who don't know, what is this, right? This is when the market opens. Today is Sunday. The market is going to open at 2 o'clock. Is it 2 o'clock today? I believe it's 2 o'clock, but I'm in Pacific time zone, right? It's actually 3 based on the time change, right? So, but for everyone else, I'm going to talk about the market timing based on Eastern Standard Time. You just need to adjust to your local time, okay? So we're going to talk about that. The EMAs that you need, I have the EMAs also available for you. It's a multi-EMA indicator, and it prints the 5, the 13, the 50, and the 800. And I forgot the 200 forgot to add the 200 on here, but don't forget there is a 200 EMA here. That's very important. The 15 to 200 crossing is very, very important. And the TDI, which can kind of help you to stay in that trade a little longer if you're not sure on when to get out. Okay, but we'll also talk about when to get out too, okay? All right, so real quickly, let me draw, I'm gonna annotate for you what the cycles look like, right? So this is your W, V, V, M, back into the range, something like that, A, W, back into the range, okay? These are your peaks, guys. Peak formation low, peak formation high, okay? Again, we expect it to go back down, right? And then create another peak formation low, right? So oftentimes we get peak resets, right? So we get up to the high and we're expecting the markets to go back down, but instead it does go and give us this little A here, which this is also the A. And this is your V, okay? And I want you to keep this in mind, okay? The prices will come and do this, and then all of a sudden, it will do this, right? And it will be going up, something like this, okay? So this is your peak reset right here. And sometimes this can reset 2 or 3 times, right? So you can be up here at this high, you know, the peak is resetting multiple times, but I want you to pay attention, draw your lines, and I'll show you what it looked like. I think this happened in GU, right? It just kind of stayed up here in the range, right? So that, you guys, is this is the cycle. This is your market maker cycle when you're going long, and this is your market maker cycle when you're going short, right? Let's keep moving. All right. So here's your market timing. When do you show up to the charts? And again, this is all based on Eastern time zone. You want to make sure that you're available based on your local time zones. Adjust your phones. Everybody has an alarm on your phone, calendars on your phone. You have available access to Google to go and see what time is 8 p.m. Eastern to your time. I don't know what that is to your time, but I know what it is to my time because I've adjusted, right? So this Asia starts at 8 p.m. to 11 p.m. Then you have this Asia breakout session. A lot of traders like to come out here and trade this. This is 11 a.m. to 2 a.m. This is literally when Asia closes and breaks into London. This is where you're going to see your stop hunts, okay? So let me annotate that really quickly. So this is Asia range, okay? You can often see prices come out here, and I'll do it in 3 pushes. Okay, this is what we typically expect. Okay, this is your breakout, right? This is the Asia breakout. Okay, and then what happens is your stop hunt box is up here. This right here, my friends, is 25 pips, and this is 50 pips. So the Asia breakout range can be anywhere from 25 to 50 pips, right? So you come up in here in the range somewhere, and then prices do something, and then they go down. They give you the signal to go down, and then guys, this is your real trend for the rest of the day, right? Okay, this is the London stop hunt, right? This is giving you the direction for the rest of the day. Sometimes it will go on through New York, and it continues on down. But then sometimes in New York, London will give you their session. Let's just pretend this is all London. And then New York comes, you get a reversal. Market does what you want it to do, right? It gives you an actual reversal, right? And then now you're going back up. Okay, so then you got your VVM back into the range, and then Asia starts again, right? So this is New York. If this makes sense. So oftentimes you will see one directional move in each session, and then sometimes you will see that London and New York are all short, or maybe it's all long. But just know that this breakout, right? You want to be careful with the breakout, because this is where market makers can psychologically trick you with these 1, 2, 3 pushes to think this is going to continue to go up, when in actuality, when London comes, it's going to be up here in the stop hunt boxes, and then it's going to reverse and go back down for London, and perhaps go back up for New York, okay? So be mindful of the breakout, okay? Don't hold this, right? Don't hold this, right? Until you have clear candlestick patterns to say, yeah, this thing is gonna continue long, okay? All right, I hope that makes sense, guys. All right, so let's move on. Let's see, what did I have here? Oh, okay, so again, all Eastern time, 2 a.m. to 5, and then here comes New York, 9 to 11. I usually trade US 30, and that thing starts to really push when the New York stock bell rings. When that thing rings at 6:30 for me, okay, 9:30 in New York, that's when that thing starts to push. Okay, sometimes you can get a real good push out of London for the US 30, but I'm not usually available for that. So if it happens, then I missed it, right? There's nothing I can do about it. But what I am available for is for this bell. All right, so I'm going to show you some of the trades that I took. These are for the last 2 weeks. This was 28th of May. Now, this wasn't every single day, but almost, right? This was the 28th of May. This was also the 28th of May. This was a 3 hits to the high thing with GU that I entered. 27th of May, it's a nice railroad. 25th of May, 24th, 21st. Okay, so this is me following the patterns and then expecting you know, whether I'm going to go long or I'm going to go short. Okay. And this was also GU on the 21st of May. This was the 20th of May with US 30. Look at this beautiful multi-session W. I entered right here. Okay, right above, right, the 50. It's beautiful. And then if you can see it's shaded right here, right? This is when the markets opened, right? So that's when I entered. All right, chart time. Let's go over to, if he goes away. All right. So we talked about, I'm going to talk to you primarily today about the psychological support and resistance, how to properly mark your charts. So first, let me change this back to 2. Now, you guys have this available for you, the Isley psychological lines. You want to install that. That's going to give you the week. You're going to have this for free. Install this, the multi-EMA or MA. You want to make sure you have the first 2 as none. Just do this, select the color and hit none. And then you have yellow for the 5 EMA. The red is the 13 EMA. This water deep blue sky is the 50, and then the white is 200, and then the blue one is 800 EMA. And then you have the work time. This is also important. This is going to draw the Asia boxes for you. So when you install this, you want to make sure that you make sure that you do that for all of them, by the way. And here's the Asia box, right? You can say true for that. You can add the yellow line, which is the 50%. I took that one off of mine, but it's the 50% marking. You can add that on there if you need to. But for this one, we're just really focused on having that box there, right? Because I want you to make sure you understand that how to draw these boxes and how the indicator can draw the Asia box for you, okay? Because that's what we're looking at. Now, another thing to note, I'm only going to look at the last 3 Mondays, right? Sometimes I just look at the last 2 weeks, but sometimes it's good to go back one more week. And that's all really we need, right? We don't need to go back to 1999 trying to draw support and resistance lines, because why, right? Why is that not needed? Because we already talked about the cycle, right? We already said that this cycle right here, it's kind of ugly, your WVVM. This cycle lasts 3 levels, 3 days, 3 ADR, right? Before it reverses and goes back down into the zone, right? So why do I need to go and draw a whole bunch of lines? You don't. What's going to help you with your support and resistance lines is the Asia open. Okay, I want you to pay attention now. These lines right here, I went ahead and did 2 weeks, right? So you have this available. You have this on the Isley, like I showed you right here. It's going to show you the last week of, let's see, yeah, this one's going to show you the last week, okay? So basically right here, we see we have Monday, and this is when markets open. So I'm going to highlight that. Okay. This was 2 weeks ago, Monday, right? That was the Asia open, that was your high, and this is your low, okay? So this is an area of interest for me, right? Asia high and low. This week, this last week, last Monday, which was the 24th, right? We had our Asia open. It was a high and low for that week. And the week prior to that, I said, I'm going to add just one more week. I'm going to add, and here's the Asia, somewhere around there. So it almost stayed the same here. And we're looking at NZD-JPY. This is a very, I don't know, everybody loves GJ. They want to trade the pound yen, right? What about the New Zealand yen, right? This is a very clear pattern, right? It's very super duper clear. It's not doing a whole bunch of ranging, right? It pretty much sticks to the cycle nicely, right? Here's your N, here's your W, right? And here's where we expected it to continue to go up, but it didn't. It came back up to the high and boom, we dropped. So guys, this is why this is literally probably all that you need, right? Trying to keep trading very, very simple for you all. So we talked about the 3 hits of the high. So we identified the high, right? The Asia high and low, which, we went back 3 weeks and that's all we did. So I highlighted that. Okay. And as you can see, ladies and gentlemen, this was like literally that 3rd hit right there. Okay. This was your 3rd hit to the high. So you could have taken that trade there. Okay. If this is all you were doing, you would have taken this trade right here. And you would have taken, let's see, what was your entry? This was right in Asia session. So if you're available for this trade, your entry would have been right here. Okay. That would have been your entry right there. Okay. So when do you exit this trade? So if you entered there, your first exit rather, would be the EMA. Okay. It's going to be the 200 EMA. That's about 35 pips. It's not bad. Okay, that is not bad if you're going to take this. Now, at the same time, we saw that this was 3 hits to the high. Don't forget what's going on down here. Let me put that there. That's your first TP. Don't forget about what's going down here at the low, because as the high is developing, so is your low. Okay, so right now, this is right here an area of interest. Okay, so your cycle completed. So if you took this cycle on down, then your new peak formation low was right here. And you can also see this peak formation low is an inverted heads and shoulders. So here's your shoulder, here's your head, and here's your shoulder. Okay, so this is almost also, because this is a beautiful reversal pattern, a beautiful peak formation low, you can also count this as your 3 hits to the low. So this would have been 1, 2, 3. You could have taken this right here. Okay, I'm gonna count that. Why not? Because it fits the criteria. And then you could have taken this. Where would your TP been? Right back up here at the high. Right? That is your TP. And it was already established for you on Monday. Your zone was established for you Monday. This indicator will draw the psychological support and resistance lines for you for the week. So you would have come here, you would have seen this head and shoulders pattern. You would have, I mean, this is so many confirmations, it's not even funny. Totally. You only need 1 TP, right? This is your TP up here, because you would have entered not only above the 50, above the 200 and the 13 EMA right here would have been your entry, and your target would have been up here, right back at this previous high, right? And yeah, this is Friday, right? Look at that, it's Friday, but guess what? You have a point of interest here, and this is where you would get out, right? And you'll be done. You would close your trade, okay? You would close your trade. You don't have to hold this thing over the weekend, because if you would have held this thing thinking it was going to continue to go on up, then no, look at that. It didn't, it reversed on you. So this is why you don't do that, right? Sometimes you get lucky, right? I'm not gonna lie. Sometimes you get lucky and this thing continues going up, but it didn't do that. We got to reset. Okay, so here comes Monday. You got the 3 hits to the low entry, beautiful, 60 pips. Monday comes along. Okay, you have your lines up here still, and the range is still around the same. Okay, and you see that this is now another area, another hit to the eye. And to me, again, that's 3 hits. So I would literally take that. Okay. I would take this entry just like I shared. My first TP would have been right around here. Okay. This is good to get out at this area, the 200. However, if you wanted to use this Asia open, you can. You see the Asia low from Friday? You can use that previous low as an exit point as well. That works. Okay, so that is the option for TP2. That's 57 pips. So I'm gonna put that one. Let's see, I'll draw this one. Okay. This is TP2. That's TP1 at the 200. All right, so let me mark this. This one was 50. Let's see if we actually use this pin right there. 62 some odd pips. Just go 60 pips. Call it a day, right? Who is mad at that? 60 pips. And then you come back Monday, you see that you're at the high, right? It's up there for the third time. You're taking this thing and you can take it all the way down to the yesterday's low, which would literally be Friday's low. And that will be your target. That's a 54 pips. Okay. Not bad. Okay. So now you're waiting for the next opportunity. Okay, you're waiting for the next opportunity. Now this one didn't come all the way up to the high, but it came pretty close, right? You're looking to see if this thing is going to give you, the cycle. But if you're paying attention to the market maker cycle, then you would have taken this thing, short right here once price cleared, okay? Once price cleared, now this is a little bit into the market maker cycle, not necessarily the 3 hits, but because it is an attempt to hit the high, but it didn't get back up there, you could take this trade, but only once it clears this, if you're going to go short, right? And the reason why I say that is because if you take this thing short, now you could probably take this thing short here. Let me make this a little bit bigger. It's not that pretty because you're up here, right? You're in this little reset area, right? So if you waited until price cleared this 13, right? And you're taking this under the 13, because the entry rules are the 5 and 13 cross or under the 13 or above the 13, right? So if you would have taken this here and your TP would have probably been around here, right? The 200, that's not a lot of pips. Not that 17 pips is a lot, but the better trade is to wait until it clears this 200. And this, you see here, the 50 and the 200 crossed, right? This is your better trade right here to take this one and take it all the way to the 800 EMA. That is your entry, your exit. Your entry is here underneath the 200. Your exit is at the 100. That's 54 pips. Okay. So again, this was, another, 3 hits to the high, because you could have counted this 1, 2, and then 3, and then you wait for prices to clear. Okay. And here's your entry. And then here's your exit. Okay. So now you're in the zone of the low, right? This is Monday, Tuesday, Wednesday. We're starting here with the low, right? So you could literally mark this if you wanted to, marking this low for the week. Okay. Because now that's where it first started happening. So now, now prices are just ranging, right? If you're following the market maker cycle, this right here is a completed, bear cycle. Now we know that we're now at a new peak formation low. And in the market maker cycle, guys, you could be ranging here at the low for days. Okay, after you've taken this short and you've come down here to establish this low of the week now you can see that your pattern is complete. Your MAAW is complete. So now you're looking to go back up again, but you're in level 3. Okay, so how do you trade this, right? Typically, when it's doing all that ranging, I don't really do a whole lot of trading. And, you know, sometimes I might come in here and try and scalp it. And if you do, okay, you just have to be careful. You might not get lucky. You're not going to get lucky every day in this market. You're just not. So when it's in level 3, I typically just wait for it. I wait for it to clear this because I just don't like it, right? I don't like how this thing here is just ranging right here. That's not a good opportunity to go in. But look, we finally, this one was a good, and this is number 1, 2, right? So when prices came back here to the low again, all right, this second push to the low actually gave us an opportunity to go long for a little bit here, right? So you could have probably taken this thing long from here, or you could have taken it, because once it hit it twice there and it gave you a flat bottom, you could have taken that long from here, from this candle. Okay. And you could have used the stop hunt, because remember, Asia has a 25 to 50 pip. So once Asia's high and low is established, remember, it's going to be 20, here's 25 pips. This is your stop hunt to 50 pips. It's around there. Is your stop hunt, right? So this thing didn't even take that long, right? So you could have taken this long, right? You probably could have gone right here to the EMAs, like I always suggest, right? And exit out of that trade, right? Because you're in level 3, okay? So now you just wait. If you want to take this short, you can take it. But like I said, for me, once I finish this cycle, I like to wait for this thing to go into the new cycle, because I don't like trading this. But if that's your jam, then you go ahead and jam on. Okay. All right. So so again, look at this perfect level 3. So we're in level 3, guys, right? We have these 3 hits to the low, because look, guys, you could count, you can either count this. Now, this wouldn't have been a bad one. You could have counted this 1, 2, and then 3, and then taken that. And then look, you could have counted this one as 1, and then 2, and then 3, and then taken this. And this would have been your ideal trade. This is a beautiful setup right here. And you would have entered when prices were above the 50 EMA. You got your 13 and 50 cross right here. This would have been a pretty darn good entrance right there. Okay. Now you already have this highlighted, right? So your first target could be the EMA, or your second target could be up here, right? It could be right here. And look, it gave it to you, 60 pips, right back here at the zone, right? That's where you exit. Let me grab my, oh, did I forget to write my pips over there? So this was about 60 pips. Again, not bad. Okay. We measured these pips here. Don't remember doing that. It's 51 pips. Okay. Okay. Look at that. Okay. So that from your, if you were available at this time, then you could have entered here after your third hits to the low, exited up here, and then now you're waiting for the next setup, right? So now you're in Tuesday, right? You've gotten, let's see, the week, let's see, if you've been trading this for a couple of weeks, from Monday, look at all these pips. You got your 60 pips there. Let's do some tallying. So you got your 60 pips, then you have your 54 pips here. Then you have another 51 pips there. And then here's our 60 pips. I think I'm missing some more pips. Okay, I didn't measure anything else. So far, you're up 220 some odd pips, right? Monday to Monday. Or shall I say Friday to Tuesday, right? You're up almost 220 some odd pips. It's not bad, right? The first 2 weeks. That is not bad. On average, people like to get about 100 pips a week, right? And if you have a nice lot size on there, because you're taking these highly probability trades, then you should be so confident in your entries and your targets. Okay. So now we just wait for the next setup, guys. That's all we're waiting for to enter this trade again. Okay. If you're following the market maker cycle, this would have been your second entry up here to take this up to the high. Okay, because this would have been a nice little pullback, and then boom, we're still climbing because the cycle isn't over yet. Okay, the cycle is ending right here. All right, so today, Sunday, the market is going to open, and your psychological lines are going to be around here for the new psychological high and low for the week. So I'm going to follow this pair this week, guys. Let you know how I do. Okay, trading it from psychological zone to zone, you know, Asia high and low to, you know, the previous week high and low. That's how you do it. All right. So I did promise you all I was going to check out GJ. Oh, excuse me, not GJ. I don't like GJ, guys. We're going to watch. I'm going to talk about GU. Okay. Now, this is another very popular pair. The pound dollar was doing a whole bunch of ranging. So it's like, usually when it does all this, I don't even care to trade it. It's like, oh, geez, I like to see moves like this, right? I want to see these big moves, right? That's what I want to see. Like, I want to rise, I want to drop, like decent. But anyway, for those of you who want to do this, let's see if this 3 thing works out. And I kind of went in here prior to this call and kind of marked, you know, the 3 zones. So again, we're starting the Mondays. We're looking at Mondays, the last 3 Mondays. And if we look here on the 7th of May, we can see that prices, looks like here is where the peak formation low, right? We're here in the peak formation low. This looks like all level 1 to me for what, 3 days, right? This is where we have our peak formation low. So now we're looking for the 3 hits to the low, because it's been ranging. You could count this 1, 2, 3 if you want, or you can look here within just the session. Let me show you here, because this was that Friday, right? Now this is Friday. Most of us don't trade on Fridays, right? Because it's too risky, but they gave us, they gave us the 3 hits. So here's 1 tap to the EMA, 2, and then we finally clear the 200, and they gave us this one right here. Okay. This looks like probably New York, right? So I would have probably taken this trade right here to the previous, you see this blue line? It's like yesterday's high. I would have entered this trade right from the 200, excuse me, you see how it opened above the 50? And I would have taken it right here to the previous high, and that's around 40 pips. I would have been done with that trade because it is a Friday. Now, because I know that this cycle is not finished, I would wait, and I see how these EMAs are all spread out and whatnot. I already have the bias that this thing was going to continue to go long on Monday, right? That's just because when you understand the cycles, you can almost expect it. Sometimes they don't give it to you, but you can almost expect it. But that doesn't mean you should hold the trade over the weekend, right? Take the pips that they give you and just be happy. So this was, if we held it right to this area, this was about 39 pips. What more do you need? Let's mark that. 39 pips. That's what I would have done. Okay, and then Monday comes. So the market again, obviously opened up Sunday, you know, Asia opens up at 8 p.m., right? So the lines will start to draw. Okay, you had another opportunity to go long. This happened in the Asia area right here, right? And this is a good time to be at the chart because this is also the Asia breakout. So you want to start trading around 1/3 of this box, right? So as you can see here, this thing ain't going down. These EMAs are like carrying price, right? So you could have literally entered right here, okay, and taken this. And then your stop box, remember, 25 to 50 pips. You would have been from the Asia Open right here to here. You could have exited right there, right? 50 pips, because you know the stop hunt box was 25 to 50 pips. And if you would have came in over here, you've gotten a little bit more pips. And that's where you've been 81 pips right here, guys. That is pretty good for Monday, okay? Did we say that was 89 or 81? Say 81. We'll just say 80 pips. How about that? So we're done, right? We're done with this trade, okay? So when you look back, you see now you're in level 2, right? You've gotten your pushes, okay? 1, 2, 3. Let me draw. Let me count that. 1 push, 2 push, 3. Right, so 3 pushes, we're done with this, right? We're not looking to go long anymore. We're waiting to see what price is going to tell us, because based on the cycle, we now expect this thing to go short. So now we're waiting for, you could literally draw. I think that's what I had did before and I moved it, but you could have literally just, again, drawn your lines, right? Now this is your high. Prices came up here, right? You could have drawn your, mark this area, because now this is, prices come up here a couple of times. So now you're waiting for that 3rd time for prices to come up here. And it did. It gave you what you were looking for. So this is the 3rd hit to the high. Okay, your target, right? We marked it already because this was Asia high. This is your target. This is where you exit. Right here. I didn't even catch the pips. 71 pips. Just milking this pair. Did you say 71 or 79? I don't know. Okay. So now we're waiting. Okay. We are waiting, because now prices are now, you can either, okay, let me just say, because we do notice that we are getting close to this 200, right? So you could literally use this as TP1 and then this is TP2. If you were going to use this as TP2, then that's 113 pips, right? So let me do here. It's 113 pips if you were to use this as TP2. I'm going to mark that right there. Right, so now you're done with that. As you can see, guys, price is printing you a nice reversal head and shoulders. This is an inverted head and shoulders pattern. Okay, here's your shoulder, head, shoulder. So here we go again with the 3, right? So you can do this a couple of ways. You can count this 1, 2, 3, and you see this reversal candlestick pattern here. Okay. Where was that? Oh, back here, head and shoulders. You can count 1, 2, 3, right? You can literally wait. You can do 1 or 2 things here. Since prices are above, look at this TDI. need a couple of influences here. You see prices above the market baseline. Okay, so you're really good to enter this thing. If you want to enter this thing, now this goes in, this is going into Asia, right? So if you were in, this is London, New York, right? Towards probably the end of New York. Again, this is the H1 time frame, right? If you're available to take this trade and you could have taken this and got this, right? You would have taken it right to this zone, okay, as your target for another 34 pips. Or you could have waited if you're not available for this and you come to the charts in Asia, right? And you're getting yourself ready for the breakout or for London or whatever time frame that you're making yourself available, and you look back and you see prices came here 1, 2, 3, then your next, and you see it pulled back, your next opportunity here is to enter this thing after the pullback. Okay, you can enter it after the pullback. This is an early entry. This is your 5 and 13 cross right there, just like I marked. Okay, you can take this trade right to the previous day high. This line right here is the previous day high. That's 37 pips. You see how Asia line marks up right there with it? You can take it right there. Okay, totally. Or because you remember you marked this area before, it's an area of interest, then you can also use this, right? You can either go here at the 5 and 13, you can wait and come here and enter this trade at the 50, right? When prices print above the 50, what happens? Beautiful things happen, right? Price is just being carried by the 50. It's been given support. You can take this all the way up to that high, because this is the area that you already marked. That's your target. You can totally do that. Take it all the way up here. This hadn't even happened yet, right? But what you do know is price has been here before, right? So you can be like, okay, I've already taken pips from here, so I'm going to go ahead and target this area as my area of interest, right? You can do that. You can hold it, right? Swing this thing. That's what you want to do, right? But remember, this is a Friday, right? This is a Friday. Some people like to do this. I'm just giving you the opportunity here. I honestly, like I've shared with you several times, do not like to do it. But this opportunity here, guys, is a good opportunity because it does have this head and shoulder here, and prices are way above the 200 and they're above the 50. Okay, so you could totally do that. Or if you're not available for this and you want to wait till Monday, guess what happened? You have this nice, beautiful W pattern right here. Okay, and you see how, look, 1, 2, 3. Again, 1, 2, 3. Execute that trade from right there. And remember, your target is still the same. It's in this area right up here. And that's 60 some odd pips, 50 to 60 pips. So if you were right here at this area, or if you used one of these where the price was, you can even use this pin, right? This could be your area. So let me bring this down here because that pin is pretty good area right there. If you use that, right? 50 some odd pips. 50 pips, not bad, right? I wouldn't be mad holding that trade. That right there. 50 pips. Right, so that is your exit. I hope this is making sense, guys. All right, so now you're back at the high. Okay, prices went all the way back to the high. And remember, this is the cycle, WVVM. Now we're getting consolidation. We're waiting for price to tell us what it's going to do next. We expect price to go short and print the MAAW, right? But remember, okay, so here we are again. 3 hits, 1, 2, 3, right? Not only did it can count the overall hits, but even within the Asia session, it hit the Asia high here 3 times, okay? And this is right at the 50% mark of Asia. So this is also a good trade to take. It's kind of the straightaway trade, right? It just falls out of the middle of Asia. Sometimes usually the straightaway trades literally just fall at the low or they rise at the high or something. But the 50% mark, I still call those that straightaways because look, it just fell. And then you had your 3 hits to the high of Asia. So absolutely take this thing short, right? So you have 2 opportunities for exit. You have the low right here, which will mark on your chart. That is 50 pips. Or you can target, you see this line here? This is the psychological line, this black line right here. You can target the psychological line at this point. The reason, or you can try and target this, but look, it never really touched it, right? So if you're watching price, and there's also this other one right here, this other blue tracer here with the low, you can target that as well. But if you're here watching this trade, right, and this thing doesn't take your profits right here at the 200, then manually exit this trade. Manually exit this trade because this thing isn't going short anymore, okay? So when you're up here at the high, you got to be kind of careful because you don't know if that reset is coming, okay? So because, and here's Monday again, I didn't even highlight that. Let me highlight Monday. This is important, right? Because remember our psychological lines drew right there. So let me highlight this so we know we're at the psychological lines. So look, guys, from the high, you got your 3 hits, you execute that trade, your first TP is there. Or if you want to hold it to the psychological lines, that's fine too, because it would have taken you out right here. That's 80 pips, right? If your target was going to this 200 and it didn't touch the 200, then get out ASAP, because this thing ain't going short, guys. It is resetting on you right before your eyes, all right? So that is your exit right there, the psychological lines. So now you wait. So now here you are again, 3s, right? You exit this trade, it didn't break this. So now your bias is we're going long. So now you're waiting for those 3 taps of the low again, right? So it kind of gave it to you. So we had 1 push here. Here's another push, okay? And here's that 3rd push. So this could be you can count all that as 1. And then here's another push to the low. And then here, boom. This is your 3rd one. You can take this long, okay? Take this long and you can take it to, look at that. Look at this range. Okay, you can go back to this area right here where Asia was, okay? This could be your target. That could be your first target, right? If you don't want to hold it. Your second target, right, could be this pin right here. It's 90 some odd pips, right? Look at that, because prices came up here. So you've already marked that. And I remember I marked this thing. I was like, yep, this is an area of interest because that's where I could possibly take my target, right? So totally take that thing up here, but you have options, right? If you're too scared to hold this thing, right? Go to this first area here, take it there. That's 68 pips. If you come up here to this last time, this highest pin right there, or maybe this low pin just around there, doesn't matter. This is your area of exit, 92 pips. Like, what? It's not bad at all. Guys, I'm forgetting to write my pips up here. But as you can see, I hope you can see, where we're going with this, right? So now we're back at the high and we wait. We wait. We don't know if this cycle is going to continue the long cycle. We just don't know that. And look what happened. It gave us a nice reversal. It was a pin here in London, and now we're going short. So I would take my entry at the 5 and 13 cross if I was available for this trade. Okay, that's where I would take my entry. And if you want to make your first exit here at the 50 EMA, that's 20 pips, not bad. Your second TP, or maybe it's your first one, would be right here at the 200. and that's 65 pips. Remember, right? We don't know because the way it's been acting, just put 50 pips. It's not bad. The way it's been acting, we don't know if prices is going to continue to go short or it's going to do what it did. Looks like another reversal pattern here of a head and shoulders, right? That's what it looks like to me. And then right here at this opportunity here, it looks like maybe this was Monday, probably New York. It reversed and now we're going back long. Okay. So that's how you do that. Your 1, 2, 3s. So I encourage you all, I don't want to make this thing too long, but I hope you can get the point. I went in here and just marked up all the areas, guys, where I saw, and that's what I want you to do, right? Is go in here and mark where you see and back test the strategy, right? Where do you see these 3 hits to the high, right? This is a push, 1, 2, 3, right? This is another 3 hits to the high right here. Boom, to the EMA. This is another 3 hits, 1, 2, 3, exit. And this one is going to be a tricky one because look, it is a second M. Look, it is an M. You could take this one right to this blue line right here. Okay, you get about 30 some odd pips right here. You can do that, right? Or you can go to your psychological lines, whatever you feel comfortable doing, because not everybody's going to hold these things. And for whatever reason, I can't drag that, but let me do this. From here to the psychological. That's 40 some odd pips. Not bad. Move this down a little bit. Not bad, right? So then what do we have the next day, Thursday? Some more pushes, 1, 2, this is another push. So our entry on Thursday is right here when prices open above the EMAs. That's where you want to enter. You can take your first target here at the high low. This is the previous day high, or you already have the zone, right? Take it right to the zone. And that's 78 pips. Come on, guys. This is an amazing strategy. It's very easy to follow. And it's good to have the knowledge of the patterns and understanding when these peak resets occur. Like for the last, 2 weeks, it's like all that it's been doing, it's peak resets, right? Nothing was completely super duper clear, right? That's probably the only one here in this one, because this would probably, this big push here could have probably been your V1s and 2s right in there. But again, this is the higher time frame, guys. And I recommend you use the higher time frame if you're going to be trading from one zone to the next zone, so you can see price clearly, see your entries clearly. So I advise you to go and back test. These indicators are available to you for free, okay? In the Dropbox link, I will put that in there so that you remember where to go get them. And if you have any questions, feel free. Don't hesitate, contact me and I'll be happy to help. All right, guys, have a lovely day.